All right, guys. So the first video of the year, USD JPY. In this one video, I'm gonna talk about the daily cycle, essentially how I use time. Time is a major confluence for price. Alongside that, I'm gonna talk about inducement, and just a lot of great key points. Um, so I'm just gonna dive straight into it. This past week, I did have a trade of the week that did total out to 101, which was this trade right here. And then alongside that, I took three other trades. One totaled out roughly around a 25 to 1, a 33 to 1, and then a 14 to 1. So this was just one pair, right? Which is I really feel like this is a great example to showcase, because for one, it showcased that you essentially don't need to trade, 5, 10 pairs to have a great week in the market. You can just find one great pair that's trending, and that's essentially you're flowing with, right? So in this case here, just to get the ball rolling, right? When I woke up around 2, well, when I did my market analysis Sunday, before the week started, which is around here, so the week opened around here, I could see how Asia essentially respected the lower New York, right? So before I went to sleep, I put an alert here, and then I set alert at this high here, and then I obviously had my point of interest here. So when I woke up at 2, I could see how Asia respected this New York low, created relatively equal lows. So for me, this was automatic liquidity. I can also see how this entire range here that is going up to actually mitigate my point of interest was essentially inefficient. As I talk about in all my previous videos, I love when I see inefficient price ranges and inefficient price action actually approaching my point of interest. And this here actually being the form of inducement, right? So before any point of interest and things of that nature, I like to see inducements, and also taking note that this was at a key level. As you'll notice, all my previous videos, inducement tends to take place at key levels in the market, right? So just to kind of like touch bases on the inducement aspect, is just enticing retail to essentially do the wrong thing. That's all inducement is. So for me, in this case, this was the enticement. As you can see, a small minor sell-off here, some maybe from an M1, there's probably some point of interest here from an M1 concept. Well, you have sellers potentially trying to sell the market, but in return actually building liquidity. So from there, price mitigates my point of interest. I wake up around Frankfurt at 2. I can see you got a follow through and a nice strong bearish push down. A nice strong bearish push, breaking structure. And from there, I would just plan the bottom of the range open and then just put in my stop loss. It was a 2-minute it was 2-minute supply zone there. So I just put it quite just below there. So this sale was just pretty straightforward to me. I had my overall market direction at this point in the market, primarily because if I do zoom out to the hourly chart in specific, and I just take these zones off, here I could see that one major confluence for my sale in particular was that this entire range of price was essentially inefficient for me, right? And then nonetheless, if I go to the 4-hour, this was a 4-hour point of interest here. So this here was my first take profit level was in here, right? So go back to I can just jump down to the 5-minute. Took the initial sale there. London, just nice London continuation play to the downside. New York comes in per se. New York comes in and continuation as well. Now, during New York, I took a buy here during New York. Now let's talk about this buy. And one of the major confluences of my buy here in particular was this point in the market here. And the reason being was because I could see that this point in the market here, when I zoomed out to the 15-minute, this one point in particular, or let's say catalyst in the market in particular, didn't necessarily actually mitigate off of anything left. When I look left, there was nothing. There was some inefficient price range here, but not enough for me to note that this was essentially the catalyst to drive price lower. Now, if you watch any of my previous videos, I'm big on one of my major concepts in trading is that everything is essentially 100% continuation. Prices never actually reverse. So what I mean by that is buyers and sellers work in correlation to essentially create liquidity, right? So the way I viewed this was considering that New York actually caused this reaction here, I knew come Tuesday this was a target, and then a target, an upside target for them price to then continue lower. Now, another major confluence of me during this time in the market was that I had my 4-hour point of interest in which price had tapped down into. It is New York, right? This line here was a 15 minute. If I zoom out to the 15 minute, this was just the last down candle before the up move right here. So that was the point of interest that I wanted price in particular to actually mitigate off of. So at this time in the market, time was now a major confluence. And what I mean by time is that considering that London had expanded, right? Timing was now in my favor for then New York to then create the low of the day, because a day has to close just like any session or anything of that nature. So in this case here, I got my mitigation here. I also took note that as price actually approached this point of interest, acknowledge this entire range of price here that was essentially inefficient. This entire range of price was essentially inefficient, which I love, which is another confluence I add on top of it. On top of that, I could see how the liquidity here was building on the buy side and sell side. Liquidity was from a scalp perspective was essentially building here. So this was just one of those trades where I didn't sit through all of this. Once I seen this reaction here, and then I just kind of see price teetering, I just set a buy limit and let it go. Came back and checked and seen I was in the trade up. I'm gonna go ahead and fast forward this up. So you can just see. Now, this here, I'm going to explain when I say essentially how buyers and sellers essentially work in correlation, how the market is always creating intention. Everything happens for a reason. And what I mean by that is because, right, so this was an automatic target for me the next day. But however, this entire range of price is inefficient. So essentially this catalyst here in the market was inducing this point of interest here for a sale, right? But now acknowledge how the sale take place during Asia, which was more confluence for my buy come Frankfurt and or London. Now, and the reason being is because thinking in foresight, not knowing that any of this is here, thinking in foresight, the way how I'm analyzing price, right, is that if this is my upside target for this, no reaction from this point here will actually deter me from getting my upside target, only being because in thinking in foresight, I'm thinking from a perspective of a reaction above this liquidity here, Asia reacting above this inducement liquidity here, and in return playing, mitigating something in here from a scalp perspective, it's only has the intention of creating a higher low for price to then continue higher, right? So just thinking in terms of that, everything creates intention. It's like a cause and effect. So this is your cause, and then obviously your effect, right? The effect being the higher low created during Frankfurt. Right. So nonetheless, Frankfurt comes in, sweeps the buy side liquidity of Asia, which has a lot to do with the daily cycle. I'm not going to dive like too much in depth into the daily cycle. It's a lot as far as like variations and things of that nature. But one thing I will allude to is that essentially in the daily cycle is for me is using time as a confluence, but Asia is essentially a guide for that, right? So in a lot of cases, you can anticipate Asia's buy and sell side liquidity to then get liquidated. But in turn, you just apply that with, obviously you build your narrative. So for me, I had my narrative. In this case, timing is now in my favor for then take a buy here. If I did place a buy, I did not take a buy here because I was a little bit stubborn. And in particular, I wanted London here, which I did not get, which I was cool with. But nonetheless, timing was in that favor for then, in this case, Frankfurt and our London, but in this case, Frankfurt to then create the daily low, right? Only anticipating the day to close bullish, right? So from that case, took this, I still was in this position here. Obviously, this was an upside target, but just thinking from a case of, obviously, if price does take this high, it has to go to some point in the market. It wasn't just going to take this high and reverse. This here is definitely not a point of interest that I like, that maybe some would take. So for me, when I zoomed out to it was a 2 hour, I could see this was just like the last major up candle for the down move. So I just used that, the open of that candle for essentially my point of interest there. Very short-lived, nothing that I was actually planning on holding long term per se. So very short-lived buy, which totaled out to be a 26 to 1. So let's see, I'm gonna go ahead and fast forward past that. We get to the next day. So took the buy there, closed that out completely at this take profit. Nonetheless, the next day comes into play. This looks a little weird. Okay, so nonetheless, Wednesday, we have Wednesday. So Wednesday sales for me were pretty self-explanatory, just pretty straightforward, primarily because at this point in the market, right, I could see how the catalyst to essentially go drive price here was created doing, well, obviously here, but if I'm just talking about in terms of sessions, I could see how London, this catalyst here doing London essentially created this high. So for me, liquidity was here, right? But nonetheless, when I woke up Wednesday, I acknowledged how Asia runs the buy side liquidity of New York, but still respected this low. So this low here to me became an automatic target, right? And then also just thinking in terms of that, if this low in particular failed to go break structure to the left, why would you come back and want to play this low as far as like price mitigating off here, go higher? Now, of course, you could, hedge a buy if you just, from a scalp perspective, obviously there was opportunity for that during Asia. You got your minor scalp breaker structure to the upside, nice play. Of course, you could have done that, but just thinking, understanding a broader picture of things, it just wouldn't make sense. So for me, this was an automatic target as far as liquidity. Now, I did not put this on here, but I did take a sale here, which was premature. So I did get stopped out break even, which I was fine with. Now, nonetheless, news, FOMC news, I believe it was FOMC, but I know that there was news Wednesday of this week. So I was just waiting for New York. But nonetheless, as you can see, the only thing New York did was come in and run the buy side liquidity of this high here that essentially that created this low. So we ran the liquidity of that. And then, I mean, thinking in terms of the same concept that I said here was that if this low failed to go break any structural left, then to me this low now becomes a target as far as where liquidity resides. So the same concept applies here, right? In turn, so which makes this sale here premature, which also solidifies my rules. I usually wouldn't take sales like these, but hey, as traders, you often try and bend the rules a little bit, and that's typically when we lose, right? But nonetheless, this high in particular here failed to actually go take this liquidity low, so then in return it becomes a target for me. So in that case, this is exactly what happened. The open of news, news opened up, price came and swept that high. We got a nice impulsive drive out to the downside. So for me, it was just, this was more so no limit, just executing right then, placing the stop above the high that swept liquidity. And then from that point, just letting it ride. Because at this point, I could see the market intentions. I pretty much got the direction I needed. Also, just keeping in mind, I could see where the liquidity was building. From a impulse regression standpoint, this would be like your impulse regression, you know, from a case of like trend line wise, you can see where people that trade trend line, you got your trend line liquidity or whatever building here. So there was just a lot of confluence as in why is essentially take a sell here. But now nonetheless, if I zoom out to the daily chart, because before I go any further, I'd like to discuss just the downside target. So of course, so now I'm in two sales. So for me, once I zoom out to the daily aspect, my first down, my target was here. This is my daily point of entry that I was essentially selling to for the week, because at this point, the market's intentions for the week by Wednesday at this point are very clear. You know, the dollar's bearish. So it was just a lot of confluence, right? So I had that point of interest in mind. So come Thursday, the only thing I'm looking for is a continuation. So if we just fast forward, let me zoom out real quick just so I can see where we are. Okay, so if we fast forward here, New York makes a low, the day closes, right? So New York makes a low, the day closes. Asia, London, you had some nice bearish order flow continuation plays to the downside. I did not trade anything in here, but however, let's talk about New York. So New York, this is just a very basic continuation sale. I'm not really gonna say basic, but just very, you know, textbook. The sale here was very textbook. New York comes in and sweeps liquidity, breaks structure to the downside. Also in this form of sweeping liquidity, I love when I see liquidity sweeps that correlate between sessions. So when I see New York taking a catalyst created during at the end of Asia, to me that adds a lot more confluence. So nonetheless, you had your liquidity, your Scott breaker struck to the downside, some internal liquidity built here. So this was just a pretty straightforward sale to me, where I just had a limit, just a basic limit set here. And price sold off as expected from there. So from here, I was in three sales. So I did not trade this actually. Fast forward a little bit. Let me go ahead and just, matter of fact, I'm just gonna go ahead and bounce out of here just because kind of towards the end of price. So from here, I had three sales. I did not trade Friday. Although Friday sales in particular were very straightforward. You can see where, you know, you had your inducement here, your nice trend line liquidity building here. Obviously, another thing to note that to further like give you more confluence as far as this sell-off during London is because when price first tapped into this daily demand zone, Asia actually creates the low in this zone, and then you get this nice trend line liquidity building here. But if you just think about timing if you just think about timing and price, right? If I'm just thinking about time in particular, would timing necessarily be in favor for Asia to create this low at this time during the day, right? So and I'm not even gonna say the daily low. Let's just say the weekly low, right? Considering this is not even past 12 o'clock Eastern time, 12 in the morning Eastern time, right? But nonetheless, timing is not in favor for me for Asia to create the weekly low, right? But nonetheless, and that's just a part of, like I say, the daily cycle, which I'm not going to dive really deep into in this video in particular. But nonetheless, you get where London, New York then goes and liquidates that sell side liquidity of Asia, taps straight into the point of interest that I had inside of the daily demand zone, which was, if I zoom out to the hourly candle just being the last down, essentially the last down move for the move coming out of here. So that was my overall take profit for sales. And then from there, as you can see, buys here, I didn't trade Friday, but this could have been an easy limit. Just thinking in terms of now the week has to close just like any day does. So in turn, this timing is now in great favor for New York to then create the weekly low, and then obviously the week closes. So this is just like the bottom of your weekly wick, right? This is just one from a weekly perspective. You don't even have to zoom out, but from a weekly perspective, this is just a wick. This is one wick here, so to essentially pretty much wrap this up, I feel like this is a really great study to showcase. For one, just because the fact that it was just one pair, and you can show how you can really just find one good pair that you're flowing with and just flow with it. You don't need thousands of pairs to trade in 1 week to be great. Also, it had a lot of great confluences as far as, using the daily cycle, which essentially for me is just time as a confluence, inducement, and things of that nature. But nonetheless, I'm gonna go ahead and wrap this video up. In the description, I will actually leave my Instagram tag that you can follow me there, and why we'll actually start posting, daily markups, daily trades I take from that. Also, I am currently working on releasing my full trading plan to the public. From there, you'll be able to access it. It's not exactly finished just yet, but you'll actually be able to access that. It's called See What Do You See? So in that case, it's all about just essentially trading what you see, trading the eye to trade what you see and not what you feel. But and things of that nature, though, I am currently in the process of wrapping it up. So you can actually stay tuned and be on the lookout for that. But in there, I will go more in depth into the daily cycle and how I essentially use time as a confluence. Few key things that you can look for in price as far as, so you can have an overview or overall ideal as far as direction in a way in which price and flow and things of that nature. Also talk a little bit more in depth about inducement, unsustainable price range, and things, how I use that as well as more confluence in my trading and things of that nature. And yeah, so that'll pretty much wrap this up, you guys. I look forward to it. 2022 is going to be an awesome year. And that'll conclude this video. I'll see you guys on the next one.